I'm Mitch Goldberg. Let's get right into it. Financial Armageddon. How many times have we heard that expression in the last few years, let alone the last few weeks? Financial Armageddon is kind of like the Wall Street lingo equivalent of shouting fire in a crowded movie theater. It's often irresponsible, very reckless, and it's really not something that is advisable to do. This video is to really focus on separating the short-term issues that we're facing right now and focus on the long-term investing themes that should be here long after we actually forget about the financial Armageddon of the day. First of all, when I hear financial Armageddon, my response to you will now be Dow 14,000. That's right, I said it, Dow 14,000. Wow, no one said that for a long time. But there are 7 solid reasons where I'm going to offer up to you my market call of Dow 14,000, my opinion, over the next 12 to 18 months. There's 7 reasons. One reason for every stock that hasn't participated, or what I feel hasn't participated, in the stock market rally we've had over the last 2.5+ years. This little mix of financial services, an old line industrial, and a few old line techs, to me, will be the group of 7 that acts like the caboose behind the Dow Jones Industrial Average train that will give it that little extra push over the top to the next peak. Why? Because all 7 of these companies are in some form or manner of their own restructuring or new product launch. And once these kick in, I expect we'll see some pretty big earnings surprises coming out of oversold stocks. Now, there are 4 themes that I want to offer up to you that give me confidence to look past the issues, past the valley, at the next peak. The first one is the accelerating pace of mergers and acquisitions activity. In an article I wrote in June of 2010 called The Incredible Shrinking Market, I wrote about this very subject and how I expected this to happen. What you're talking about are taking companies out of the marketplace. The M&A pace is good for a number of reasons. And what we've seen recently are big deals in energy, financial services, telecom, technology, and consumer companies as well. What happens is, in a slow growth or no growth environment, it's very difficult for companies to come by what's called organic growth. Therefore, they have to go out and acquire market share. Okay? So they cut costs, and that's how they continue to grow their earnings. The other way M&A activity works, or I should say, helps to work, is because by removing the availability of publicly available companies, money managers who are committed to stocks, have to buy more shares of the remaining companies available. Number 2 is this incredible, and I mean incredible, operating leverage story that we've been witnessing for the last 2.5+ years. I wrote in August of 2008 about a cycle. The article is called The Good Parts of Bad News. In every downturn, recession, you get companies that cut costs aggressively, and then when the economy recovers, they have tremendous operating leverage. They have tremendous earnings growth. This has been the biggest driver of stock prices, in my opinion, in the last 2.5+ years, and it's still continuing. So what I see here is this: companies that can cut costs in the developed world, Western Europe, the US, and Japan, and reinvest in overseas like the BRIC nations, Brazil, Russia, India, and China, should continue to show rising profit margins. Number 3 is the rebuilding of Japan. This is a big theme. It's been going around a lot. But the difference is it's finally happening. Now, the images of what happened, those natural disasters in Japan, are absolutely haunting. But the resilient people of Japan will rebuild, and that's good for earnings. The supply chain disruptions are already starting to lift. The manufacturing base is starting to kick back in. Remember, their industrial base was relatively unscathed by the natural disasters there. Really what happened is they took a hit to their power grid. Now that's coming back online. You take that, add it to the rebuilding of the northeastern part of the country, and I see a very big earnings driver for multinational companies for many years to come. My last theme This could be a little bit controversial because you really haven't heard this one going around much. The last one that I think is going to be very important is the election cycle for November 2012. And if you think that the debt ceiling negotiations were cantankerous, then you have to believe that the upcoming November 2012 cycle is going to be downright nasty, probably the nastiest we've ever seen and the most expensive we've ever seen. I think that so many people are going to be mobilized and so much money is going to be spent that this election cycle coming up could actually become its own form of an economic stimulus package. I can't even overstate this if I tried. That's how big I think this is going to be. Okay, so there are 4 themes that I'm holding on to that I think get us to the next peak, Dow 14,000. M&A activity, operating leverage, rebuilding of Japan, and the November 2012 election cycle, which if you think about it, has already started in earnest. Thanks for watching. Please send me an email, mgoldberg@clientfirststrategy.com. Let me know what you thought. Send me a comment of how you think I can improve this video for the next time. Send me an insult, whatever you want. I promise I'll reply. Thanks again. I'll see you soon.